Stagflation with CME Micro Futures Contracts. This is Phil Gunn. I'm a Senior Sales Manager with Philip Nova. In today's webinar, we'll be discussing trading on both directions of the market using micro index futures and also using micro oil contracts to speculate on rising oil prices. Before we begin, I'd like to do a sound check. If you can hear me loud and clear, just type yes into the question box. Also, during the webinar, if you have any questions, do type them down in the question box as well. I'll address all the questions at the end of the Q&A, at the end of the webinar during the Q&A session. Great, looks like everyone can hear me clearly, so let's begin tonight's webinar. Welcome everyone once again to the seminar, Hedging Against Stagflation with CME Micro Futures Contracts. Rising inflation has been a headline as CPI data for US hits 8.5% in July. Other countries around the world as well. UK inflation, for example, is at 10.1% for July. The Federal Reserve has raised interest rates in reaction to rising inflation and tapered QE. As a result, we see that index corrected itself now and it is in a recovery stage upwards. Going forward, we expect to see volatility in the markets, and one can use a CME index futures to be able to trade both directions of the market. In the event there's a recession and inflation persists, we can see rising oil prices and falling stock index. The micro contracts can be a tool for you to hedge against such stagflation moves. We'll get into that really soon. My name is Phil Gunn, the speaker for this webinar, and I've been with Philip Nova for more than 10 years now, since 2008. I hold a dual license in futures and stocks, and I'm Senior Sales Manager to help clients trading in futures as well as Forex, and shares too, with understanding the product and market by providing coaching and economic information to make proper trading decisions. Investors are always looking for opportunities in the market, and today I'm excited to share on a CME index futures that is now offered for retail clients. There is the micro contract size and the regular E-mini size, so the entry level is catered to most retailers, especially in the sense of risk management, which is important when trading futures. For beginners, you can start on the micro sizes. Due to this size of the micro contract, this allows many more investors to be able to participate in the market in a way more suited to your profile. If you are a new investor, the first part of the webinar will be explaining the characteristics of the index futures. For the second part, we'll discuss on the micro crude oil contracts as well. As oil prices have been spiking and with rising inflation, this could continue on this trajectory. Throughout the webinar, you may have questions. Feel free to post them in the question box. My facilitator will arrange them and let me know at the end, and I'll answer them during the end of the webinar. This webinar will also be recorded and put up for viewing at your leisure time. So just sit back, relax, grab a drink, and enjoy your webinar. Before we start, a quick disclaimer on the webinar today. Materials provided here is for general information and does not constitute a recommendation or solicitation to trade. Okay, let's touch on the agenda. The topics that will be covered in this webinar is as follows. We'll have a general perspective of what the product is, how does index futures work in general, after which we'll take a deeper look into the characteristics of each of the index futures. There are four basically, but we're covering more on the popular NASDAQ, S&P 500, and the Dow Jones. After that, we'll move into the calculations of the trades, in other words, to find out how the profit and loss works. We'll then wrap up the first part of the reasons why we choose to trade micro E-mini futures compared to other available similar products out there, such as CFDs and ETFs. The second part of the webinar, we'll have a look at the WTI Crude micro contracts, understanding the contract specifications, as well as the fundamentals data that affect the crude oil prices. We'll then look at some technical charts for some outlook on the US indices and the crude oil. Lastly, we will then touch on a demonstration of Philip Nova trading platform when we have time to let you have a feel of how the platform works. Okay, great. Let's get started now. So to begin with, what are micro E-mini index futures? The index futures is used to speculate the price direction of the index. The underlying is the stock index, for example, S&P 500, NASDAQ 100, Dow Jones. The two most popular are of course the S&P and Dow Jones. These indices basically tracks the underlying basket of shares which move the index itself. So if you are interested in trading the stock market, but you wish to invest in a broader basket of shares, the E-mini index futures will be an appropriate tool for you to use. There's also the micro size contract, relatively new contract, but very liquid. It's a scaled down contract from its predecessors, the E-mini index futures. This means the micro E-mini is 1/10 the size of the regular E-mini. This enables more retail clients to be able to enter the market due to the small contract size. The risk exposure is reduced and better managed. The index futures are traded on US exchanges like CME and CBOT, meaning to say it's a fair open market where investors come together to the central market to trade. The counterparty is not any single institution, but anyone ranging from financial institutions or retail investors all around the world. This is a huge market. The estimated average trading volume is about 1 million micro contracts daily for the micro E-mini S&P in October of 2021. Below, you can see the ticker symbols for the mini index futures as well as the micro contracts. Basically, the micro has the letter M in front of the ticker symbol. For example, the NASDAQ symbol is MNQ for the micro NASDAQ contract. Okay, let's move on. How does trading micro index futures work? Let's take NASDAQ for the example. NASDAQ focuses primarily on the tech sector. So we are saying that we want to invest in the stock market. You can actually use this to enter the market. Consider this as investing in the top 100 US tech companies, but you just need to buy one contract of the micro E-mini NASDAQ. Currently, the initial margin for such a one lot of contract or micro contract is $1,650 US. So take for example, the NASDAQ is trading at 13,400. You can enter the market to buy one lot of the micro NASDAQ E-mini contract at 13,400 points. This has a notional value of about $26,800 US. You can then wait and sell at a higher price when the index rises. For example, if the index rises from 13,400 to 13,500 points, the notional value becomes 27,000. This means that you will have made a profit of $200 from this trade without buying the actual shares. Hence, this is actually a pure speculation of the index itself by buying the index first and selling the index when it rises. This can also be done for the short side by selling the index first at a higher price, higher index, and buying it back when the index drops. But we'll explain more for the short selling later on. So there is no interest or financing cost on the positions. Unlike other products like CFDs, which charge you financing costs on the borrowed margin or leverage, as long as you have come in with the funds of $1,650 US for the required margin, which can also substitute with the equivalent amount in Sing dollars if you prefer, which is about 2,300 Sing now for the conversion, but interest will be charged on this margin of 1,650 US since you do not have the funds in Sing dollars, since your funds are in Sing dollars. So to avoid this interest, you can convert the Sing to US dollars to avoid the interest charges completely. This is recommended for the long-term positions when you intend to hold a position for a period of time. But for the short term, it is okay. And it's a choice whether you want to reduce this number of money conversion. So if you have USD funds, you can fund it with US dollars. But if you have actually Sing dollars, you can also fund it in Sing dollars and buy the contract. So other than that, there's no financial charges, and you can hold the position as long as you want, but you need to do a rollover every 3 months because the contract expires every 3 months. So for the commission, it is very low with a promotional rate of $1.30 USD per lot per trade until the end of this year, 31st December, and this could extend after that. This means for a round trip of buy and sell, it costs you only $2.60 USD plus GST, of course. Normally, this will be actually a $6 cost. So the promotional rate is $2.60 for a round trip. This is easy to break even with 6 ticks to break even for the Nasdaq. As there's a lot of liquidity, the spread is tight at 1 tick, which is 0.25 points. That's for the Nasdaq. Let's go into a discussion on what the index actually encompasses. So let's talk about S&P 500 index. The Standard & Poor's 500 index, or S&P 500 index in short, is the most heavily traded contract amongst the equity indices. In fact, the top most liquid futures contract trading. Understandably so, as it tracks the S&P 500 index, which is a market capitalization weighted index of the 500 largest US public traded companies. It can be regarded as the best gauge of large cap US equities. Companies include Microsoft, Apple, Amazon, Google, Berkshire Hathaway, etc. Due to its wide coverage of the US stock market, investors who wish to invest in a basket of US shares may consider trading in the S&P index futures instead. The second index is the Dow Jones Index. This is also another popular US index, which is the Dow Jones Industrial Average. It measures the stock performance of 30 large companies listed on stock exchange in the United States. Comparatively to the S&P, many does not consider it to be an adequate representation of the overall US stock market. But the industrial portion of the name is largely historical, as many of the modern 30 companies have little or nothing to do with the traditional heavy industry now. Because it only includes 30 large cap companies, it is not weighted by market capitalization and does not use a weighted arithmetic mean. It's simply just a price weighted index. Even though it doesn't cover many companies, it's still a very popular choice among a lot of investors. The companies included are shown in the table. Companies include Apple, Boeing, etc. Next is the Nasdaq 100 index. Along with the Dow Jones Industrial Average and S&P 500, it is one of the 3 most followed indices in the US stock market. Although it's Nasdaq 100, there's actually 102 listings due to some of the companies having more than one listing because of the size of the shares. The composition of the Nasdaq composite is heavily weighted towards information technology companies. The Nasdaq 100, whose components are a subset of the Nasdaq composite, accounts for 90% of Nasdaq's composite movement. There are many ETFs tracking its performances. This index includes the FANG stocks, which stands for the 5 most popular and best performing American technological companies, namely Facebook, Amazon, Apple, Netflix, and Alphabet, which is formerly known as the Google. So having known how the index tracks the underlying stock companies, we'll now look at the contract specifications. Listed here, you can see the margin requirement for each of the micro index futures. For the micro E-mini S&P, for example, the margin required is just $1,100 US at the moment. This means with just $1,100 US, or equivalent amount in Sing dollars if you prefer, you can enter to buy or sell 1 lot. We'll look at E-mini S&P. The smallest tick is 0.25 equals to US $1.25. Since the commission is $2.78 for a round trip, that would mean that 2 ticks or 3 ticks will break even with a profit. The contract value is $5 times contract value. So the index at 4250 will mean a value of about 21.25 thousand USD. So you only come in with a fraction of the value at $1,100 US only, which is a leverage of about 19 times leverage. For the mini size, everything is just 10 times the size of the micro. For beginners, you can try with the micro size first to get used to trading it. You can also do multiple contract sizes of this micro size if you find the movement too slow. Therefore, you can actually do 2 or 3 micro lots contracts to multiply the effect of each movement. To take note that this applies if the market goes against you as well. The same principle applies to other contracts as you can see listed. Feel free to come back to this slide later if you want to take a closer look at the margin requirements for each of the contracts. So let's take a summary of the characteristics of the index futures. Now we move on to understanding the characteristics. It is bidirectional market, meaning that you can actually buy for the upside if you think the market is going up, or you can sell first if you think the market is coming down. Typically in the stocks market, you can't do that as you can only buy first before you sell later. Then after, you can buy, if you short sell first, you can actually buy back at a lower price to take a profit. So this allows you to short the market. As shown here, there are 2 contract sizes you can opt for. The micro size, for beginners, you can try it for control sizing, and the bigger mini size, which is 10 times bigger. You can do denominations of each of the contract. The initial margin required is about 5% of the contract value. So you do not actually come up with the full value of the contract, but simply a margin of it. The leverage of this margin is about 19 times. As mentioned, for the micro Dow Jones is $880 per contract. For the micro E-mini S&P is $1,100, and the micro Nasdaq now requires $1,650. You can fund this with USD or SGD equivalent to enter the contract, but if you prefer to fund in SGD, interest will be charged into the borrowed USD margin. For short-term trades, as mentioned, it's advisable not to convert the SGD to USD to avoid exposure to frequent currency exchange rates changes. So on the leverage, since there's a leverage, there's a mark to market every single day at Singapore time 5 a.m. when the market closes. This is based on the daily settlement price provided by the exchange itself. Based on this settlement price, if the position is in the money, or so to speak, making profits, you can still maintain the position. However, if the market goes against you, you need to top up the difference to hold the position. This is known as the margin call. I'll explain in detail in the next slide on the margin call. Next, about the expiry date of the contract. Each of these contracts is 3 months expiry. This means that the available months are March, June, September, and December. When it comes close to the expiry, you need to close out the position to realize the profit or the loss of the contract. And then if you wish to maintain the position, roll over to the next available month to maintain the position. In this process, you only incur the commission charges for the rollover. There will be no financing costs or any interest for this leverage. You just need to have sufficient margin, which is required in USD or SGD equivalent. For long-term positions, you can convert this SGD to USD to avoid the interest charges. I hope you have followed so far. We'll now take a look on the calculations of each of the trades that you do in the contract itself. So shown here is the price quote from the Philip Nova, our platform for trading the futures contract. You can see the bid-ask price for the contract in particular is micro E-mini Nasdaq September contract. So the bid price is 13445 and the ask price is 13445.25. This is one tick spread because one tick movement is 0.25, and 0.25 equals to 50 cents US dollars. So one tick movement is 50 cents. This means that a 1 point movement will be equals to $2 US dollars. So if 13445 increased to 13446, that's a $2 movement. Let's assume that in the account you have exactly 1,650 US dollars, which is the margin requirement for one lot of the micro contract size. So as I mentioned, you can short sell the contract first and buy back at a lower index in view of a downside market. So selling one lot of the E-MiniIndices, sorry, there's a typo here. Let's sell it at 13445 index. And then assuming that the index falls to 13345. So you buy back at a lower index at 13345. This, because it drops and you sold from a higher price and bought back at a lower price, the difference here is 100 points different. As 1 point is equals to US $2, 100 points movement in the Nasdaq would mean that you have made a profit of 200 US dollars. So this is how you calculate the difference. Of course, you need to cover the commission cost. So in the account now, it becomes $1,650, which you originally had, plus 200 US dollars profit, realized profit, minus of the commission, I'll round it up to $3. It will be 1,847 US dollars in the account. So pretty straightforward, right? This is a case of a profitable trade and which you close out the trade already. What happens if you hold the position overnight? In this example, we'll look at one that actually which you do not close off the position. So similarly, in this example, we assume we have exactly similarly, we do the same contract for the margin of Nasdaq. One micro lot size is 1,650 US dollars. And in this time in the account, we have 2,000 US dollars, more than enough to start one lot, but not enough for two lots. So to sell one lot of micro E-MiniIndices at 13445 as well. But at the end of the day, we do not close the position. That means you are still exposed to any price movement of the index. However, at 5 a.m. Singapore time, which is the close of the US market, the settlement price is released by the exchange, and the Nasdaq is settled as 13400 index. So you can see here, this is a difference of 45 points. This will equate to roughly about 90 US dollars in difference. In the account now, although you are still in position, not close out, but you'll show in your daily statement $2,000 plus 90 US dollars, a total of 2,090. This is not the final figure because this is an unrealized profit. And the following day, the market can go against you or goes furthermore into profit in your favor. So the value changes. It really depends on the index which you close out the price at. So you can see that the movement is relatively manageable if you trade this contract, because the size of the contract is relatively small. 100 points movement is not as bad, but typically the Nasdaq can move 300 to 800 points in the volatile times now. So that would mean roughly about $1,000 movement in a very extreme scenario. Next, we'll look at open position, but in a non-profitable trade. In this example, we'll still look at the micro E-MiniIndices, and the initial margin required is 1,650 US dollars. There's a typo here, sorry about that. Right, so assuming the account funds we have is 2,000 USD, right? So we also sell at the index at 13445, but at the end of the day, instead of going my favor, which is downwards, it went up instead to 13900 points. This is 455 point difference in the index against my position. So since 1 point is equals to US $5, 455 points will equate to 910 US dollars. All right, so in the account, we have the funds 2,000 US dollars minus off the unrealized loss of 910 US dollars. Unrealized because you have not closed your position yet and still subject to any price movement changes. The amount of funds after deducting the unrealized loss remaining account is actually 1,090 US dollars. This is not enough to maintain the margin requirement of 1,650 US dollars per lot. So we take a 1,650 minus off the amount of funds we have in the account, it gives us 560 US dollars. This means there's a shortfall of $560, which triggers a margin call that you need to top up to maintain this position. If not, the position will be liquidated 2 days later if it's still in deficit. Of course, the following day, the market can go further in deficit or goes back in your favor and cancel the margin call. So this example actually shows you the case of a margin call. And to avoid that, we try to have excess funds in the account to avoid frequent transfers of money. So to maintain your position, it's advisable not to use fully the capital that you have in the account, but have some excess funds to allow some volatility in the movement of the index. Okay, we'll take a 30 seconds break here. Okay, let's move on. We have discussed mostly on the contract specifications and calculations on the micro index futures. Now we will go into the reasons why we trade this over the other products out there like CFDs and ETFs. So first of all, this contract has a great control of the risk exposure. Now we have the macro size, which is a very small contract. As you can see from the example, the movement is a few $100 movement. My micro size is actually 1/10 the size of the mini size. This gives you more control over the contract size and allows more for the beginners to participate in the market. Also, with the electronic trading online, it is a highly liquid market, which is excellent for intraday trading. Typically, we do not hold the positions very long, but during the night time, after work, you can actually make a trade in the night because the US market is just open, and exit the market quickly before you go to bed. Since the market is quite volatile, it's possible to do that in the nights for trading. There's no financing cost for this leverage, so you can hold the position without worry for any interest, as compared to CFDs where there is financing cost. Only thing is the margin which can be charged interest, but this can be totally avoided by coming in with funds or converting the funds into US dollars instead. There is no counterparty risk, and the done trades are confirmed, as it is executed on a transparent exchange. So no worries about counterparty risk. With the high liquidity, the bid offer spread is very tight. This makes it easier to break even with a tight spread. The round trip commission is also very low at $3 as compared to trading stocks, which can be 0.28%, depends on your stock account. This is a proportion rate that has been extended once and over time again, so I reckon that it will be extended again after the end of this year. The usual amount is $6 for the round trip. As mentioned, this is actually for the trading of the of the micro index futures is around the clock trading. Trading starts from Monday Singapore time 6 a.m. and ends on the Saturday morning at 5 a.m. Singapore time, which is almost 24 hours. You can trade on the go or at night at home. We have the mobile version where you can actually also monitor the index in the day if you want to on your mobile, and you can close the trade anytime you wish when it's in the money or making profit. The weekends the exchanges are closed, so Saturday, Sunday there's no trading. As compared to other ETF products here, there's a fixed timing which can only trade in the day, but you are not able to trade in the nighttime. So these are the advantages of trading the micro E-mini futures contracts to gain exposure to the stock market using a basket of securities by trading index futures. Okay, I've decided to include in this webinar on the WTI crude oil contract also. This is also a smaller size crude oil contract, as recently there has been rising oil prices, and it might be a good time to also speculate on the oil prices for some interested parties. So we know that the ongoing sanctions by the West and the allies on the energy since the outbreak of the Russia-Ukraine crisis has resulted in persisting high crude oil prices. Despite so, there has been additional rising demands from Asian countries, and Russia has raised its forecast of crude oil production exports till the end of 2025. The micro WTI crude is the smallest futures contract you can find to trade on the crude oil prices. it is a 100-barrel contract size. The initial margin requirement is very low at $946. This is traded on the US NYMEX exchange, which is one of the most traded crude oil contracts in the world. Some contract specifications to take note here is, this is denominated in US dollars, and the smallest tick movement is 0.01. So for every 0.01 movement, it equates to US $10. Being a monthly contract, the rollover is done every month. So the active month traded is always the month ahead. For example, now coming to September, the active month traded now is the October contract. For the micro crude contract, it is cash settled by the exchange. So all positions are closed out and settled on the expiry date based on the final settlement price released by the exchange. There's no delivery, so if you do not close out the positions, the exchange will close it out for you based on their final settlement price. The expiry date for this is determined on the 4th business day before the 25th calendar day of the preceding month. For example, for the October contract, the expiry date will be based on the preceding month, which is September 25th. As September 25th is a Sunday, the actual date taken is the Friday 23rd September. Counting 4 days before that, you get 19th of September, which is the last trading day. Therefore, you need to liquidate before 19th of September for the October micro crude. Not to worry, all this is actually listed on the Nova platform, Philip Nova platform, which I'll show you during the demo on how to refer to the last trading day for your index futures as well as the WTI crude contracts as well. Please note that this expiry date that I mentioned is only applicable to the micro contracts and not the regular size ones. For this micro WTI crude contract, there's a promotional rate also at $1.50 US, $1.50 US dollars per lot. A round trip will mean about $3 US dollars plus GST. You can break even with just one tick since 0.01 equals to $10. Crude oil is an extremely volatile contract and not for the faint-hearted. However, with a smaller contract size, the exposure is greatly reduced. Take for example, trading crude. Crude is trading at $90 US dollars per barrel. If the price of crude rises from 90 to 100 US dollars, one lot of micro crude will equate to about $1,000 USD price difference. Hence, the risk exposure is still manageable in a big movement of a $10 movement in price of crude. So generally, the crude oil is traded on a short time frame, as there are many fundamental factors affecting the price. We'll take a look at the factors that may affect crude oil prices in the next slide. So here's a very quick overview of what are the fundamental data related to WTI crude. Basically, the demand and supply side of the crude itself. The first organization, the OPEC, which stands for the Organization of the Petroleum Exporting Countries, is a permanent intergovernmental organization of oil exporting developing nations that coordinates and unifies petroleum policies of its member countries. The OPEC seeks to ensure the stabilization of oil prices in the international oil markets with a view to eliminate harmful and unnecessary fluctuations in the oil price. So the OPEC meeting affects traders because oil production quotas for the OPEC member states are set during this session. These quotas for oil production have a strong impact on the global supply of oil and influence its price. This is because OPEC members control 79.4% of the proven crude oil reserves in 2019, and the organization supply approximately 44% of the world's oil. So it's the biggest oil producer as an organization. OPEC Plus have been very reluctant to step up the outputs for the crude oil, despite the US or the Western outcry and soaring inflation. The next OPEC Plus meeting is scheduled to be September 5th. So you have to look out for their meeting minutes about how much production they are willing to spike up in order to control the oil prices. The next, of course, the US, we have the EIA, the Energy Information Administration, which releases its weekly report on the US stockpiles of crude oil. The standard release time and day of the week will be in Singapore time 10:30. Sorry, will be in Eastern time 10:30 a.m. on Wednesday. That will be roughly 10:30 p.m. on Singapore time. Yeah. Reports are published on their website, so you can refer to this link over here to check out how the stockpile is doing for US crude oil. So on the supply side, investors likely are eyeing the developments also on the Iran nuclear deal to materialize, because Iran also produces a lot of crude oil, but they wish to have the Iran nuclear deal, where US used to provide funds for them in order not to go into nuclear development. So this potentially increase the inflow of an estimated 1 million barrels per day of Iranian crude oil to the rest of the world, which can greatly help to tame down the prices of crude oil. So we have mostly looked at demand and supply. Demand side, we have not discussed it, but as you know, due to inflation, and the economic activity has slowed down, demand is slow. But coming to winter, a lot of European countries require burning of the fuels or natural gas, so this might spike up prices as well. So let's take a look at the technical charts. Here we have the crude oil daily chart. In a big picture, since the 24th of February, following the Russian invasion of Ukraine, we can see that oil prices have spiked higher to around $130 per barrel at the highest peak. Since then, prices have been correcting, and we can see a downward channel on the right side of the chart. I drew a resistance turn support line at about 84.66 cents. This should serve as a support for now, but being crude oil, the price is extremely volatile, and no support is a very strong support. Prices are still weak at the moment, and downside is expected in the near term. However, we have seen the prices starting to pick up, so this view has actually changed since the slide has came up, because we see that oil prices are rising, and the upside is limited by the 40 MA around $96 at the moment. Fundamentally, we have discussed on various supply elements from OPEC to US. Despite sanctions on the Russian crude oil, they are still in the market. Next, on the demand side, with rising inflation and interest rates, we might see an economic downturn, which I mentioned earlier, which proves to be a downside risk in view of the weaker economic activities, leading to reduced demand in the market. However, the overall demand remains with winter coming, and energy prices can still remain elevated. So I would see crude oil prices will be volatile, probably to be in the range of $84 per barrel to $96. But there's a likely possibility of higher prices pushing in view of higher demand for winter and lower supply of the oil. So that is for the analysis for crude oil prices. We have discussed on the index, and we'll also take a look at how the stock market is doing now. So in this Nasdaq daily chart, since the last Fed Reserve meeting, the rate hike of 0.75% in July, the market has been on a recovery because the next meeting is 2 months later, which is now in September 21st. We will announce the next interest rate decision, which most likely will be another rate hike. Also, thanks to the corporate earnings, reports have been quite encouraging, allowing for some bounce off. However, we can see the bounce off didn't last long, and some correction is starting to happen. So the question remains whether the market will turn into recession. As many analysts have pointed out, it will in the next year. So we do see a contraction in the US GDP data in May and June. So technically, it's kind of in a recession, right? The next figure to be released is actually today at 8:30 p.m. on 25th of August for the GDP. So with also the bond yield curve playing along the lines of inversion yield curve, which is typically also a precursor to indicate recession, it would be possible to say a short-term period of mild recession is unavoidable and expected, to say the least, by the end of this year. The length of time for this recession or mild recession depends on how fast inflation figures can be brought down quickly, and also how the economic activity resume again. So over here, the levels are shown 14457 and 15200 are the two main resistance levels for consideration. I would think that Nasdaq is on consolidation scenario now with a very big range, and it will not bypass 15,200 should there be some more push for some upside. The V-shaped bounce off as shown here is garnering some momentum, but we already seen some correction in the past few days. It has reached support area around 12,800. If it breaks this 40 MA support, a deeper correction can be expected. So it will be a consolidation scenario until we have to see at the end of the year if the US economy actually goes into recession, which most analysts think it will be a mild recession ahead. Right, I also put in the Dow Jones daily chart. As with the Nasdaq, a similar situation unfolds on Dow Jones also. A retracement is ongoing and the support area is around 32,700. If the support area breaks, there can be a deeper correction. There's a lot of volatility for such a scenario and the market swings are to be expected. However, do caution in the last quarter, to take caution on the last quarter of this year, where there are more downside risks involved. The resistance area for the Dow Jones will be in the range of 34,659 to 35,187. Okay, so this is the Philip Nova platform which you'll be using to trade the the futures contracts. We have it available on desktop, or if you prefer on your mobile to trade on the move. For today, we will just be discussing on the platform on the desktop, and I'll show you a demonstration or a quick look on it. If you're interested to sign up for the demo, you can also sign up by scanning the QR code, which I'll show you later. So here's the demo URL. There's a different URL from the main live trading account. It will be sent to you once you sign up for the demo account. Basically, you just log in. Okay, so once logged in, let me just give you an orientation. You will see the live prices shown over here. The chart or the menu will be shown over here. And at the bottom will be the monitoring of all your orders, working orders, complete orders tab, and open positions. And the amount of funds you have. Of course, this is a demo account, there are no funds, but you can attempt to try and place some orders to get a feel of how the orders work. Right. Before you start, of course, you need to add in the contracts. Over here, we already have the Micro E-mini Dow Jones active month contract, which is September currently. Let me just run you through on how to add contract. Simply click on Add button. We'll try to add a futures contract for the Nasdaq. So all this will be available to you once you sign up for the demo to try out also. And the Nasdaq is traded on the CME. And you look for the Micro E-mini Nasdaq, which is the ticker symbol MQ. Click on it. You have to select the month. You can select, as you can see, in quarterly months, or you can just select the active month, which will update itself automatically. So I'll do that. I'll select the active month, and it's been added. Let's go back. Now in the watch list, you can see that the contract active month for Nasdaq is September. So as mentioned earlier, you can actually track the expiry date by simply clicking on the contract itself and click on contract specifications. Over here, display will be last trading day that you have to close out the contract. Else, for this contract, it will be actually auto liquidated by the exchange, cash settled by the exchange based on their final settlement price, which is the date shown here, right? So options that you can do by clicking on it, you can place the order, or you can click on the chart. From the chart itself, I'll not go into details, but you can choose the time frame. Over here is the 1-day chart, and the price is shown here. You can see this is actually the demo, but it shows the actual live price that's trading. So it's 24 hours from Mondays to Saturday morning 5 a.m. So you can trade any time of day. In fact, you can actually place a trade now, right? So to start a trade, just click on the price over here, buy or sell, and then you can choose the order type. So typically to enter the market, use the limit order to queue for the price you want to queue for. I can do a market order, and then we have the stop loss order, which we'll cover later on. And so for here, let's say the market you want to buy a low price at 13,000. I can go ahead and do that. So I change the figure to 13,000. All right, and this is one quantity, which is one lot size for the micro contract. Just make sure it's a micro E-MiniIndices contract, right? So I will buy at a lower price. If the index comes down, I place the order. And a confirmation screen, just make sure you go through everything again. There's a micro E-MiniIndices September contract, the limit order to queue for one lot at 13,030. It's slightly different. Okay, 13,030 will do. Yes. So once you've done that, you can see that the orders went into working orders, and it has been done already because the price has actually reached 13,030. So under completed orders, previously I was trying it out. So you can see this is the contract that's being filled. This one, right, at 747, right, is the contract that I have submitted and filled. And now I'm in position for one lot for the price of 13,029.75, which is a better fill than 13. Typically you won't get that because this is a demo account, right? So so it's been done, and you're in position. So under the open position tab, tracks the live P&L that you have for this contract. So you enter at this price, and the last price traded for sell is, to look at this price over here, is 13,027. So currently there's a small unrealized loss. So when this figure turns positive, we have to cover for the commission, which is roughly about $3 for a round trip. You will be able to close out the contract. Okay, so this is the steps of flow where you place the order, and then you can monitor orders at the bottom over here. So it's a first in, first out basis. So you have one lot in position. To sell off, similarly, you just go here and then you queue to sell off. So let's say you want to sell off at higher price, of course, at 13,031 maybe, or 32, right? You can do so. So I'll place the order to sell in this index, and I place the order to sell. Make sure the color is right, it's red color to sell. So place order, and the confirmation is to sell one lot at 13,000. At 13,032. Place order, yes, 13,032, yes, and close that. So it will be under the working orders until the price reaches 13,032. So working over here, we have a sell to work at 13,032 for one lot size. And once it's complete, this will flow from the working orders into the complete orders. So currently open position, we are at 0. We have to wait for that trade to complete itself. However, if you want to cancel the order, working order, you can do so by clicking on the cross button over here. Just a confirmation, yes, cancel. And then it is cancelled, and we'll go into complete orders as a cancel order as shown over here. So to close out the position straight away at market, I also can do that by changing the order type to market order type, and then it's a red color sell. I will sell off with a loss of 550 plus commission, which will be shown on a daily statement the next day only. So I will close off by clicking market order, just to show you as an example, right? So yes, you can see my open position is closed off, and I have a realized loss over there, right? Of course, you can wait until it's profitable before you do that. This is just an example. And lastly, we have the stop loss order. Let's assume the position is still in position, and you want to do a stop loss order. You can choose a stop limit order, right? And for example, if the market goes against you until a very low level like 13,030, 13,000 even, you want to try to execute the stop loss to prevent it from more losses. And then the range will be any price from 13,000 to 12,995. So it will try to execute best at 13,000, but if not, it will execute at the best available price, 12,999.75, 12,999.5 until it executes. But usually there's liquidity in the market, you can execute at 13,000. So I specify the range here to ensure that this will definitely be done for the stop loss. Then you can place the order. So there are these three order types. Not to worry if you are not sure because it's the first time trading in micro index. When you're open account, I'll be assisting you with all these trades, and you can have any questions you to answer via WhatsApp or call if you want to find out more on this, right? So we have done the quick explanation on the demo of the Philip Nova platform. Let's go back to the slides. Okay, we are coming to the end, but I hope you found the information useful. Let me just touch on the available services offered by Clearly Capital. If you sign up for the account, which is available online using my QR code, which will be shown later, I'll be providing daily WhatsApp economic data updates, such as the one shown here, from Mondays to Thursday. There will also be technical discussions in these WhatsApp messages on the trades. I'll be assisting you with any questions pertaining to your account or trading or market movements. I cover markets on Forex, global indices, precious metals like gold, energy, and commodities. You can still you will still be executing the trades yourself, but you have a second perspective on the technical aspect and more information of the trades that you're doing. So besides my personal WhatsApp broadcast, you can choose to opt in if you want. There's also the daily trading highlights that's sent by our in-house analysts. These are technical reports on suggested levels for your reference. They can be suggested entry and exit levels for your consideration. This is sent by email by daily trading highlights. Shows the directional views from a global research desk. These are starting points for your own research to identify opportunities and make sense for you. Pairs include stock indices and commodities, namely such as S&P Dow Jones, Simsky, the Nikkei from Japan, China A50, Nikkei 225, Hang Seng crude oil, crude palm oil, and then crude oil itself. So another avenue from an in-house analyst. And next, on top of that, we also have the daily asset commentaries, which we cover commentary reports to give you updates on economic news happening around the world. This will keep you updated on economic news that might have potential impact on the markets, saving you the work of searching for it on the internet yourself. We provide daily asset commentaries on gold and also on crude oil. Hence, we provide the fundamental and the technical aspects of trading information to you, and you can have a platform ready to enter the market whenever you want to. Besides the analyst reports, you can also reach out to me on technical views of your individual trades as well. So there's an ongoing promotion from now till 31st of December 2022. When you place a trade as small as 1 micro lot size for only $1.50 US dollars, and some other trades on micro indices futures is $1.30 all in, plus GST of course. The products are shown on in the table here. This promotion will be automatically tagged to you for all the new account openings. Feel free to take this opportunity to try out trading these micro index futures, or at least gain access to the price movements. Or if you prefer, you can sign up the demo account first to take a look at the market live price movements. So you can scan the QR code here to open a live trading account and enjoy this promotional rate. We have another promotion, which is we support MS promotion, which will end on 31st August. There's still some time left. This promotion actually you get to receive 100 SGD when you open the Philip Nova account and deposit $1,000 Sing, and you have to make one trade in any asset class, so you can trade 1 micro lot size, and then you'll be eligible for this. So you can use this QR code to open account, and you will still be subjected to the promotional rate for the individual contracts. To participate in this promotion, scan this QR code to open the account, but you have to act now because the promotion ends 31st August and the trades have to be, the one trade have to be executed by the deadline of 31st August. So you may take a screenshot of this if you want. If not, we will send you the slides tomorrow. Next, trading the index futures on Nova is actually very easy on the desktop. So this is actually a mobile app there's also a mobile app to trade on the go on your mobile phone. So if you're interested to get started, and you can open a live trading account with Philip Nova at zero cost. There's no maintenance cost and no platform fee. The entry level is very low. You can start trading with margins. As you know, micro lot size can be $880 for the Dow Jones, or up to $1,650 for the micro Nasdaq. So if you've been thinking of following the market and trying to hedge your positions, or thinking of speculating the downside for the market, for the stock market, it's a good time to have an account ready by your side, which is free. And you can start if you want to own a smaller lot size. When the opportunity is right, you can just short the market if the market is going for a recession and a correction downwards. As market is bi-direction, you can also long if you want to, if the market is on the upside. So you can get started with an account opening first and trade live whenever you're ready. Just fund in when you wish to. So funding can be done online via PayNow and credited within half an hour. There's no admin fee or any cost in maintaining the account. The whole process is very easy by SingPass and can be done within minutes. Just create an ID and scan the QR code shown here below. The link will be tagged to me, so I'll be assisting you once you open this account using the QR code. Alternatively, you can use the URL shown. Foreigners can also use the account opening online via the QR code. If you have any queries, just feel free to drop me a WhatsApp message or email. My contact information will be given at the end. So let's try and do some answer for Q&A session before we end off this webinar. So few questions. One from Peter Ho. Hi, can you explain to clarify the difference between Dow Jones, S&P, and Nasdaq? What's the US main index market? So as you can see, the US market is very huge. They have a few index, even Russell. So the three main are these three. The biggest one is the S&P 500 because it covers more of the US market, 500 companies, which is the largest companies, biggest capitalization, so to speak, in the market. So to have a broader coverage, you will trade the S&P index, right? If you are specific on certain industry like the tech industry, maybe you're following Tesla or Apple, you like technology sector, Nasdaq is the one for you because it's covered specifically on technological sector, the top 100 technological companies. The Dow Jones Industrial Average is a smaller version of S&P which covers the 30 largest. So you can choose S&P or Nasdaq. It depends on your needs. So to answer your question, US index market will be the S&P. More specifically for the tech sector, you have the Nasdaq. So question from page 0.01 equals to $10. I think you might be referring to the crude oil. Okay, $100,000. That is the regular. Did I say 0.01? Okay, that's the regular size one. The micro size one should be smaller at $1, which is 1/10 the size. You're right. Sorry about that. So for WTI Micro Crude, 0.01 is equals to US $1. Yeah. So probably there's a mistake there. So next question, how do I have chart and market depth in the same screen? Do you provide coaching services? Okay, chart and market depth in the same screen. We do not have market depth for this. Unfortunately, because of space constraints, you can only have the charts or the order menu separately, if that's what you're asking. Yeah, so you cannot separate because of screen limitations. You have to switch between the tabs to show the either the chart or the order menu. The coaching services is not chargeable. Yeah, we can do so at the office. So you can also scan my QR code if you want to have a one-to-one coaching. Will basically cover some technical aspects on what I usually do when I look at technical charts. So give you an insight to how to read charts and save you a lot of time on learning it on yourself. Yeah. So if you are interested, do feel free to sign up for the coaching. I think it's on the next slide, which I'll show you with my contact information. Is the demo account free? Yeah, it's absolutely free. Just scan this code right here, QR code right here. Philip Novan demo on the left hand side. You are able to open this account and send you within seconds, immediately send you, and you can start monitoring from tonight. Right, and probably can do some paper trading since a demo account, and see whether you like the movement, you're comfortable with it, and start actually getting to know more about the index futures Yeah, so feel free to scan this code for the demo account. Two more questions. On your platform, is the volume profile, is there a volume profile indicator? This I have not heard before, to be honest. Yeah, but volume, no, we do not have a volume indicator shown on this chart. Yeah, there's no volume indicator for us. Yeah, okay. From Alvin chart, is there a tool like EMA, MACD? Yes, on our platform there are indicators. Sorry, I didn't mention that. Just to take a quick look. You can select the indicators here and search for them. You can see the MACD or MACD histogram, which are typically used. Yeah, it will be shown. And what else is that? EMA, definitely we have EMA. It's a very common indicator, exponential moving average. And you can actually set the parameters yourself. Yeah, you're able to do so to add the EMA. Yeah, so I'll leave it to you to explore the indicators. But yeah, typically we have an EMA to have an overall view of the trend of the market. Yeah. Okay, so that's quite a lot of questions. Any more? Yep, that's all. Okay, so we have come to the end of this Q&A. Let's go back to the slide. Thank you for joining us. If you require a demo account, you can scan the QR code here on the left. To attend the other upcoming webinars, you can scan the middle QR code. To open a live trading account, please use the one on the right, or you can go back to the WSNS screen if you want to participate in that promotion. So any questions, you can feel free to contact me, right? This is my contact information, and for the coaching session, if you wish to contact our office at Raffles City Tower, you can scan this QR code over here for the coaching session, and I'll get in touch with you. So this is all the time we have for today. Thank you so much for being such a wonderful audience. Feel free to drop me a message or email me if you have any questions. You can sign up for a demo account. It's absolutely free. So link to this recording will be sent to you tomorrow or the after tomorrow. If any queries on the webinar or want to get started, simply reply to our email and I'll get in touch with you. So this is Phil Young signing off, and have a good evening ahead. Thank you.